Hello, and thank you for joining us for our dollars and cents presentation. This morning, we're going to be going through lots of information about the billing and financial aid process here at the university. For those of you who I haven't had a chance to meet on campus, my name is Katherine Presutti. I'm the Director of Student Financial Aid here at the University of Hartford, and I'm joined here by a colleague who I'll allow to introduce herself now.
Hi, everyone. Good morning or good afternoon or good evening, depending on when you're watching our presentation. My name is Katie Kitchens. I'm the Assistant Vice President in the Division of Student Success and excited to have this conversation with everyone today.
So as I mentioned already, we are going to be going through lots of information. We're going to start out with some general university resources. I will take you all the way through the financial aid process. Katie will take you through much of the billing process. And then certainly we will give you many different options in terms of helping to cover your costs here at the university.
So to start out, some of the main resources to be aware of, first is your Student Self-Service Center. So this is an account that your student has access to. It's a portal they can log into that holds a lot of really important information and things for them to do. So this is where, for example, they will go to register for classes once they get here. For first-year students, incoming students, the advisors in the Center for Student Success will process their registrations, but beyond that, they will use the Student Self-Service Center. But this is also, and more relevant to today's presentation, where they will go to view their bill or make payments on the bill, to check if they have any holds on their account that might be related to billing and finances, to accept their financial aid award, and to look if they have any outstanding requirements that financial aid needs them to send in. So one other thing I want to make everyone aware of is the Family Educational Rights and Privacy Act, also known as FERPA. So if you're not familiar with FERPA, this is the legal document that basically states that students have the rights to their educational records, and that as soon as they become college students, that right fully passes to the student and no longer applies to the parent as it did in the K-12 environment. So what does that mean practically is that if a parent who isn't designated by the student on the specific FERPA waiver that the student would need to complete, then we cannot share any information with that parent or guardian or any other third party about the student's academic record, including information about their bill. So it's really, really important that all of our students designate someone on their FERPA waiver that they do want us to be able to speak with, so that we can answer the questions that you may have about billing and payments or academic information or anything else related to your student. Finally, I want to draw your attention to the Center for Student Success. If you haven't already heard about the center, it is a one-stop shop for first-year advising. So all of our incoming students will have a first-year advisor assigned through the Center for Student Success. But this is also a place that all students can go to ask questions, receive information about financial and administrative services. So what does that mean? So if a student has a question about a bill, or if a parent has a question about a bill, at any point during our regular operating hours, you can call us or drop into the center, and we will go through your account with you and answer any questions that you have. So that definitely applies over the summer. We love to get calls from families over the summer. You're looking at the bill, you have questions, you need somebody to help you figure out what options you have in terms of making payments. We're more than happy to take those calls in the CSS, and we look forward to breaking that down with you.
Great, thank you, Katie. So now I'd like to turn it over to talking about the financial aid process. First and foremost, on your screen now, you will see a picture of the Bates House located on campus. If you've come to campus for a tour, this is also the Office of Undergraduate Admission, but we do share this particular building with that office. We are open Monday through Friday from 8:30 a.m. to 4:30 p.m., except for Fridays during the summer months. We will close at 3:00 p.m. Our contact information is on the screen, and we welcome you to call our office, to speak with us via our live chat feature, to email our office, or to call us to schedule a virtual appointment or in-person appointment. We're happy to meet with you. If a student was to walk into our office at any point during a typical semester, certainly we have financial aid representatives available during our regular office hours to sit and meet with a student. Every student is assigned a financial aid counselor while they're here at the university. Listed on the screen now, you will see a listing of those financial aid counselors, and it is designated by their program or major in the school and college that they're in. Of course, we want students to build a relationship with their financial aid representatives so that we get to know a little bit about your family financial situation and can help the student throughout the process. But certainly, if for some reason the student walks into our office and a certain representative isn't available, any one of our representatives can assist a student with any questions that they might have. We do also work closely with the Center for Student Success, as Katie mentioned. For example, if there's an academic issue which may impact financial aid, we would work very closely with that student's first-year advisor. We know who they are and we build relationships with them so that we can keep the flow of information open in order to assist students. So what is financial aid? Financial aid is a combination of grants, scholarships, loans, whether they be student loans or loans in a parent's name, and employment opportunities. So those can be work study opportunities or other part-time employment opportunities on campus. The Office of Student Financial Aid at the University of Hartford helps students with all 4 of these options. And I want to just mention that many students are using a combination of all 4 of these options. So not one or the other. They're using a combination of all 4. And as we go through the presentation this afternoon, we will definitely talk through how students are using this in combination to help cover their costs. The first step to the financial aid process actually begins at the student's time of admission to the university. So at the time of admission, they would have received a decision letter letting them know that congratulations, they've been admitted to the University of Hartford, and also in many cases have received some type of academic or talent award. And that is based on the review of the admission requirements that they submitted to the Office of Undergraduate Admission. In terms of these awards are generally renewable for up to 4 years of undergraduate coursework. And this renewability criteria is going to be different based on the type of fund that they may have received. So generally speaking, all awards require at least what we call satisfactory academic progress, which is a minimum completion of credits and GPA, and I'll go into more detail about that later. But some of the awards have a higher GPA threshold, so maybe a 3.0 or a 3.25, depending upon the award. It is up to the student to know what the renewability criteria is of these awards in order to renew them from year to year. So students can find this information by logging into their self-service center and clicking on the award type, and it will tell them what they need to renew it. They can contact our office, the Office of Financial Aid, or they can work with their first-year advisor and the Center for Student Success, which will also be able to give them that information. I do want to mention that that these awards, again, are for 4 years of undergraduate coursework. If a student for some reason is in an accelerated program in which they're completing undergraduate coursework in a shorter amount of time than 4 years and then moving into a graduate coursework program, just keep in mind that they would not carry that award into the graduate portion of their program, specifically because graduate financial aid and the graduate billing process is much different than undergraduate. And we definitely work with students when they reach that point in their program to walk them through that process as well. You've likely already gone through the need-based financial aid process here at the University of Hartford as well, because you may have completed a free application for federal student aid or a FAFSA form. The FAFSA form is the only application that we require in order for you to be reviewed for need-based financial aid, and the University of Hartford does participate in institutional, federal, and state aid funding programs. So any student that submits a FAFSA to the University of Hartford will automatically be reviewed for these programs. If you've not submitted a FAFSA yet, but you think you'd like to apply for need-based financial aid, it is definitely not too late for the fall of 2023, but we do encourage you to get that done as soon as possible. In terms of renewing need-based financial aid from a need-based perspective should renew each year as long as the student is maintaining academic progress, so progressing towards their degree program, but also that they've completed a FAFSA every year. So the FAFSA becomes available typically on October 1st of every academic year, and you must complete it by April 1st of every academic year in order to secure need-based financial aid for the next academic year. One of the need-based financial aid funds that we participate in is employment opportunities, specifically though the Federal Work Study Program. The Federal Work Study Program is an opportunity for students to get funding from the U.S. Department of Education, apply to their financial aid award, and then using those dollars to work on campus and earn a biweekly paycheck. So you will not see financial aid posted to a student's bill automatically because they need to earn those funds by working on campus. Many students work on campus each academic year, and many offices on campus hire student employees. The University of Hartford will host a job fair the first 2 weeks of each fall semester, and that's an on-campus employment fair. So during that fair, students can come and meet with federal work-study employers on campus, but also other part-time employment opportunities on campus. If you're thinking, we didn't see federal work study listed as part of our financial aid award, but we think we demonstrate financial need and we'd like to be reviewed for that particular program. The reason you may not see it is because we do have a limited amount of funding available and lots of students who are eligible. So we do maintain a waiting list for those funds. So if you'd like the student to be added to the waiting list, we do encourage you to email our office at finaid@hartford.edu, and we'd be glad to add them to that waiting list of funding. I do just want to reiterate that you will not see this listed as a financial aid credit. Financial aid credits will make more sense to you in just a little bit, but you will not see this as listed as a financial aid credit as part of the student's billing process. We also review all students for the Federal Direct Loan Program. The Federal Direct Loan Program is a loan program offered to students to help pay for their educational expenses. These are loans, so they do need to be repaid. But the Federal Direct Loan Program is an umbrella term, and we'll talk about a couple of different loans that exist within that. The first loan that exists within that is the Subsidized Direct Loan Program. The Subsidized Direct Loan Program is an opportunity for students to borrow on an interest-free loan program while they're in school. So the subsidized loan will not have interest while the student is in school. The unsubsidized loan program will have interest while the student is in school. So that's the main difference between the two, and that's a big question that we get from many students. Both programs do not require repayment while the student is in school, so the student can defer those payments until after they graduate. These loans are in the student's name. They don't need a cosigner. They don't need to do an extra application. The only application required is that FAFSA form, and we will automatically review students. The amount that the student has listed as part of their financial aid award letter is the maximum amount available to them based on their grade level and based on the requirements from the U.S. Department of Education. So we cannot increase those amounts. Some students will see the subsidized loan and the unsubsidized loan. Some students will only see the unsubsidized loan. So again, it will vary by student. No additional application needs to be completed, as I mentioned already, but there is a loan agreement or a master promissory note and an entrance counseling that does need to be completed before these funds are applied to the student's account. And those are completed online through studentaid.gov, which is the same website that you would have used to complete the FAFSA form. So the student can be working on getting those done now if they'd like to over the summer. Financial aid will not actually apply to a student's account until 10 days prior to the start of the semester for each semester. Right now, for the fall of 2023, that date is scheduled at August 21st of 2023. So financial aid will not actually apply to their account. That being said, you will be billed before that point. And so in order to make sure that your bill reflects any pending financial aid that we cannot yet release, we do list financial aid as a credit or a pending transaction as part of the bill. And Katie will show you what that looks like on the bill in just a few minutes. In order for financial aid to actually apply to a student's bill, all required financial aid documents must have been received and reviewed. Student must have, if they are selected for verification, must have had this completed and must have, submitted that to us, earlier than August 21st so that we can make sure that it's ready to go by that August 21st date. I do just want to mention that if the student is receiving a scholarship from anyone outside of the university, so maybe a local organization or a nonprofit group, and they are sending us a check, they will not see that listed as a pending financial aid credit. We will only apply those funds once the check is actually at the university. So that's just something to keep in mind. As far as the financial aid requirements process, we do, in some cases, request additional information from students in order to maybe confirm their FAFSA information or to secure any type of aid programs that they may have been offered. One of those big requirements is if the student was selected for verification. So in some cases, the U.S. Department of Education will say to the university, please confirm the information that's been listed on this student's financial aid application or the FAFSA form and make sure that it's accurate. So we may ask for tax documentation in those cases. We may ask you to complete an additional worksheet. Students should be able to see whether or not they've been selected for this process and whether or not we're requesting any additional information by logging into their self-service account now. So again, we've already put that information out there. Shortly, within the next couple of weeks, the student will also get an email which will prompt them to log into their self-service account because information is missing. As mentioned, if they are borrowing on the direct loan program, either the subsidized or the unsubsidized, they may need to submit an entrance counseling or a master promissory note. So again, making sure that we're getting these documents done timely is very important in order to not prevent delays with their financial aid. Generally speaking, financial aid will renew from year to year as long as certain requirements are met. The first of those is just reiterating, making sure that you're getting us any documentation that we're requesting in a timely manner. The second of those is making sure that the student is completing or making satisfactory academic progress. As I mentioned already, satisfactory academic progress is a minimum requirement in order to renew financial aid from year to year. So academic and talent awards and all need-based awards require academic progress in order for aid to be renewed. It is going to vary by the school or college and the major that the student is in. So the student can work with their first year advisor, faculty advisor, or the Office of Financial Aid to determine what their specific minimum requirements are. But academic progress is twofold. It's a measure of a cumulative GPA. So that cumulative GPA is around a 2.0 for each academic year. Again, that's a minimum requirement. Some academic awards have a higher requirement of a 3.0 or a 3.25. So it's really up to the student to know that they don't only have to meet that minimum, but they should also meet that higher GPA threshold if they have one of those academic or talent awards that requires it. The other piece of academic progress is a successful completion of credits for each academic year, and that's for between 24 to 28 credits per year. And again, it's going to vary by the school or college that the student is in. And then lastly, you do need to complete that FAFSA form every year by April 1st in order to renew the need-based financial aid.
All right, so everyone take a nice deep breath in. I know this is a lot of information and we're going through so much here and we're trying to do it in a linear fashion. So what Katherine was just going over with you is all of the things that have happened to date, right? So you would have received any academic or talent-based awards first, then you would have filled out a FAFSA and received any need-based awards second. And now it's time to talk about the tuition and fees and the bill that's going to be released in July, and then what the next steps are that flow from those things. So our tuition and fees are available at hartford.edu. And full-time tuition, you should know, is from anywhere between 12 and 18 credits. So if a student's registered for at least 12 credits at a minimum, they're going to be charged that full-time tuition rate and be eligible to receive that financial aid. All the way up to 18 credits, that charge stays the same. You'll also notice on your bill some mandatory fees, a registration fee and technology fee, as well as a student support services fee, which provides students with access to all the different supports that we have on campus. And then some schools or colleges and some courses may have fees that are specific to those schools or courses based on the additional materials and resources required, either to put that class on or to support students within those colleges. If your student is going to be living on campus, they will also have charges on their bill for a room and for a meal plan. So if they are not living on campus, if they're going to be commuting, they do still have the option to purchase a meal plan. And so depending on whether or not they do that, they would have a charge on their bill for that as well. A meal plan can be upgraded or downgraded, meaning there's a couple of different meal plan options. Some are more expensive and provide some additional flexibility in terms of dining at other eateries on campus, but both are going to have all access to Commons Dining Hall. So between you and your student, take a look at that, those different options and see which one works best, and just know that there are different costs associated with that. Our commuter meal plans work a little bit differently. So that is sort of a separate process to go and look through to see which commuter meal plan might make the most sense, if one makes sense for your family at all. So the university is going to send a bill that's going to be fully electronic. That bill is going to go, that billing email is going to go to the student directly, unless a parent has been set up or another third party, a guardian, a grandparent has been set up by the student as an authorized payer. So if that hasn't happened at this point and it's beyond July 7th, then likely your student received an email that links to their bill. But if we're still before July 7th, when you're listening to this presentation, there's still time to be set up as an authorized payer and receive that first bill. Even if it's after the first bill has gone out, I still recommend getting set up as an authorized payer so that you can receive future bills and communications and be able to have access directly to the CashNet portal. So a student can set you up as an authorized payer by going through their CashNet account to do that. And we'll show a screen in just a minute of what that CashNet portal looks like and where somebody would go to set you up as an authorized payer. And what that then does is it allows a parent, guardian, a third party to receive those billing statements and then to be able to log in directly with their own login information and view that CashNet portal to be able to make payments directly there. I also want to mention this guest payer link that you'll see on your screen, which allows you to make a one-time payment. That's the link that you can share with family, friends, relatives, anyone else who may be wanting to make a contribution to the student's academics. So all they would have to do through that link is enter the student's ID number and last name, and they're able to then just tell the system what amount they want to pay directly to that student's account, and it will go through that way by whatever payment method they choose. They don't get access to any of the information about the account. They will just be able to enter an amount that they would like to pay towards the account. So when are bills due and when will you actually see them? I keep referencing this first week in July. And so that is when the first fall bill will go out. So we bill separately for the fall semester and for the spring semester. So as you're looking through the tuition and fees for the full year, and you're looking through those financial aid awards that are for the full year, know that half of that is going to come to you in July. The other half of that is going to come to you in December to kind of make that full year happen. So one of the things we really encourage you to do, either through resources that have been provided by financial aid or just on your own, is to start estimating what your bill is going to look like before you even receive it. So you can know through our website what our tuition and fees, room and board charges are. So that's like your top number. And then you know from having gone through the financial aid process, what your financial aid award, maybe for talent-based scholarships might look like, for need-based aid, any of those subsidized or unsubsidized loans that have been awarded to the student. And you can basically do a calculation at that time that's going to tell you your full year out-of-pocket cost. What you then want to do is divide that into half would be billed for you for fall and the other half would be billed for you for spring. So just be aware that when you do see the bill come out and you see the financial aid that's been applied, it is only going to be half for that fall semester because you'll see the rest being applied towards the spring bill. So our bills are going to be generated every month. So that first month, you'll get it that first week in July. That entire fall bill is due by July 28th. But as long as there remains any past due amounts on the bill, there will continue to be a bill that's generated and sent every month at the beginning of the month until those charges or until that balance comes to zero. There are late fees associated with late payments. Obviously, we don't want that to happen. So we really want folks to be doing this in preparation for receiving that July bill and then know everything that needs to be done in order to get that resolved by the July 28th due date. So here's that screenshot of the CashNet portal as just one example so we can show you a couple of things. So some of the areas that are circled would be that overview tab. That's where you could click to actually see the page that we're on right now. But under My Account, a student could click there to set up an authorized payer. The payment plans link, and then also down in the center of the screen is another place that you can look and see payment plan information. I'm going to talk a lot more about payment plans later in the program, but it's very front and center on the page for you to actually go in and set up that payment plan. And then over on the left, you'll also see statements, and that's where you can see those snapshots. So when we bill at the beginning of July or beginning of August, beginning of September, those bills that go out are a snapshot of what's on the account at that moment in time, all the charges and all the payments. Now we know things are going to shift between billing cycles. So from July, 7th to August 3rd, there are going to be some things that change on the account. Maybe a meal plan gets changed, maybe parking gets added, maybe payments have been made on the account. If you want to be able to see those changes in real time, this CashNet portal and this overview page is your best friend. So this is the page where you can actually look and see. So for this example student, Howie Hawk, you can see that Howie has a current balance of $30,505. Now, if Howie went in today and made a $15,000 payment, Howie could log right back into this portal and he would see that amount drop based on the payment that he made that day. So this is a place that I really recommend going anytime you want to check on the status of your bill, rather than looking at one of the past statements, but you can always check those statements just to see how things have evolved over time. And now the moment you've all been waiting for, this is an example of a bill. So maybe you're watching this presentation after you've already received your bill, maybe you're watching it before, but in either case, I think it's valuable to go through an example so we can kind of explain everything that you're looking at here and how that's going to translate on your own document. So on this document, you're just seeing an example. So your student might not be an arts and sciences student, they may be an ENHP student, or they may be an engineering student. And so they would see their college reflected as the tuition fee. The tuition and fees are going to be the tuition charges are going to be the same across our schools and colleges, but you'll just see them listed with the specific college that student's associated with. And then we separately break out all of the other fees or charges. So you're seeing here that there is a lab fee that's been associated, that's a course fee that's been associated with one of the classes that the student is taking for $25. You're also seeing the technology fee, that student support services fee, another lab fee, a registration fee. In this case, the student is going to be living on campus, so you are seeing a room charge and then an all access meal plan. That board charge is on there as well. Then below that, you're seeing some payments or credits. So what the heck are those? In May, when you would have paid that tuition deposit in order to say, we're definitely coming to the University of Hartford, a portion of that is actually a tuition deposit and a portion of that is a housing deposit. So those will actually pay towards part of your fall bill when, because we already have those funds, those will automatically be applied. So you'll see those reflected on your bill when you receive it. And then you can see below those pending transactions. So this is what Katherine was talking about with how that financial aid is going to be displayed before it actually pays to the account. It's just a credit right now because these are all pending. So in this student's case, we have an example of a Hawk Achievement Grant. We have a university grant. We have those subsidized and unsubsidized Stafford loans. And then the student was awarded a federal Pell Grant. So then what does that do to offset those charges? So as you can see off to the right or left-hand side on the bottom, we have that current balance, $30,775. So that's taking all of the charges minus any payments that have actually been made to the account. But then the amount now due box is much less than that. And that's because the amount now due is reflecting all those financial aid credits that we expect to apply to the account. So it's the amount now due number that you really want to be paying attention to, because that's already taking the financial aid into consideration. Now, something I want to draw your attention to is that this student was awarded the subsidized Stafford and unsubsidized Stafford loans. If your student was awarded those loans, but you don't plan for your student to use them, then you need to be very careful when you take a look at this bill. If those loans are listed on the bill, it means that they are applying in some way towards offsetting that balance. And we'll need to take some steps to account for that. So if you're not planning to accept the Stafford loans, first of all, they need to be declined in the Student Self-Service Center. If they're declined before you receive the bill, then they won't show on the bill at all, and everything will be fine and dandy and accurate, and there's nothing else to do. But if they're declined after the bill has been received, then what you want to be careful about is that since it is expecting those loans to help pay off the account, the amount now due is going to be inaccurate in that case. So if you're not planning to accept those loans, know that if you see them on the bill, they still need to be declined. And then you also need to factor that back into the amount now due, because that amount is going to be a little bit higher without those loans helping to offset the amount.
Thank you, Katie. So at this point, we've now taken you through the financial aid process. We've explained to you the billing process, and now you have an amount now due. And I'm sure that many of you are wondering, okay, how do I now cover that amount now due? First and foremost, I want to encourage you all to meet with the Office of Financial Aid, to sit down with us, and we can help you figure out the best options for your family because the best option for one family is going to be slightly different than the best option for another. At this point, we're going to go through a combination of payment plans and different loan options that students can use, and maybe some additional scholarship funds that students can utilize to help cover their costs. As I said earlier in the presentation, students are using a combination of all of the things that we're discussing to help cover their costs, so please don't feel like you have to choose one or the other. We actually encourage you to use a combination of payment plans, loan options, and scholarships to help cover institutional expenses. One of the first options I'd like to go over in terms of using a loan to cover that amount now due is the Federal Direct Plus loan. I've introduced you to the Federal Direct Loan Program earlier in the presentation when I talked about the subsidized and the unsubsidized loan program. Similarly, the Federal Direct Plus loan is a loan program administered through the U.S. Department of Education. However, this particular loan program is a loan program that is offered to parents of undergraduate students to help pay for educational expenses. So the parent is the borrower and the parent has the obligation for repayment. You do need to complete a FAFSA form, but you will not automatically be reviewed for this particular loan by completing the FAFSA form. There is a different application that does need to be completed online at studentaid.gov, and the parent would log into that site using their login information that they use to complete the FAFSA form. The Federal Direct Plus loan is going to do a credit history check on the parent to determine eligibility for the loan program. And part of that credit history check, they're going to not be looking necessarily at credit score or debt to income ratio, but they will be looking at basically the absence of adverse credit, meaning on your credit history, is there no foreclosures? Is there no bankruptcies? Is there no accounts and collections more than 60 days past due? And is there no previously defaulted student loans? If those things are missing from your credit history, the likelihood of you being approved for this particular loan program is very good. However, in the case if you've been denied, you have a few different options. First and foremost, you can appeal that denial directly through the U.S. Department of Education. So for example, let's say you had an account in collections, but you've since paid it off and it's now in good standing. You can provide that documentation and they may overturn the credit decision. You may use a cosigner or a creditworthy endorser on the loan. And then lastly, I mentioned earlier in the presentation that the amount that the student had been offered in the subsidized and the unsubsidized loan was at its maximum. In this case, if a parent is denied the parent loan or the plus loan, the student then becomes eligible for an additional $4,000 in the unsubsidized loan. So either way, the student will get something towards their educational expenses if a parent is going through the plus loan process. At the end of the application, you will know automatically if you've been approved or denied. If you are approved, your interest rate is an 8.05% fixed interest rate, and that is the same regardless of your credit history. I do just want to mention that there is a fee associated with this loan. So before the U.S. Department of Education would send the loan funds directly to the university, they would take out a fee, and we can help you estimate what that fee amount would be to make sure that you're borrowing the exact amount that you need. Similar to the subsidized and the unsubsidized loan program, the parent does need to complete a master promissory note in order for these funds to apply at that 10-day prior to the start of the semester point. So again, if you do that application, let's say today, you'll know right at the end of the application if it's been approved or denied, and then it usually takes our office about 48 hours to receive a copy of that application and begin the process of requesting those funds from the U.S. Department of Education. Another option that some families will utilize to cover that amount now due is what we call a private or an alternative loan. Generally, a private or an alternative loan is a loan for a student to help cover their educational expenses. Differently than the subsidized, unsubsidized, and the plus loan that I've gone over before, these particular loan programs are not at all associated with the U.S. Department of Education. So these are private lenders, so private banks. Some names you might recognize would be SoFi student loans, Discover student loans, Wells Fargo student loans, just to name a couple. And there are many different lenders out there, but we do maintain a list of suggested lenders on our website that families can utilize to help search for these loan programs and decide which lender works best for them. The student, for these particular loans will go through a credit history check. And so a light bulb should go off in your head, which is, well, the student probably doesn't have credit at all. If they do, it's probably a minimal credit history. And that is true. Many students will need a creditworthy cosigner to cosign on these loans for them in order to be eligible. While we won't help you select a lender, what we will do is give you some things to think about and talk you through some different options that you should be considering when choosing a lender. So some things we might talk to you about is, what is the interest rate ranges on these loans? What are the repayment options? So is repayment required while the student is in school? Can they defer repayment while they're in school? Cosigner release is another thing that we might talk with you about. So cosigner release basically means that the student does have a cosigner on the loan, but they graduate, they get that great full-time job, they begin making payments back on their loans, and they make a certain number of years of on-time consecutive payments, at which point they are able to ask the lender to remove the cosigner from the loan, so that the cosigner no longer has a legal obligation on that particular loan. And then similarly to the PLUS loan, there are sometimes fees associated with these loans, so you want to be considering that when you're making your final decision. Again, we do maintain a suggested list of lenders on our website, and it will actually allow you to compare lenders side by side through that tool. So it is a really good starting point. But if you need assistance with that, certainly we would welcome you to contact our office. Some students will apply for additional scholarships outside of the university to help cover their expenses as well. We call these outside scholarships or private scholarships, and they're generally through different civic organizations, nonprofit groups, maybe a parent's employer, that sort of thing. Maybe there are some local scholarships that students have applied for through their high school counseling office that they may have received as well. At this point, it is probably too late to begin applying for scholarships for the fall of 2023, but certainly we welcome students to continue to apply for future years. A lot of times students, when they don't have a school counseling office sending them those local scholarships, they forget to apply for them. We do maintain a list of search engines on our website to facilitate helping search for these outside scholarships. And I generally tell families the best time to do that is sometime between the fall and the spring semester. So students usually end their fall semester sometime in mid to late December and don't pick up classes again until late January. So that time period is a perfect time for the student to get organized, start searching for scholarships for their next academic year, and start maybe writing essays or getting their transcripts together, getting recommendations, that sort of thing. Of course, if a student needs any assistance with applying for these scholarships, we're happy to help. Two things that I want to mention. Number one, did receive any local scholarship, we do just ask that they notify our office. In most cases, it makes absolutely no change to the student's financial aid award. But of course, if the student's receiving some type of full tuition scholarship or very large scholarship to cover their expenses, it may adjust their need level and therefore impact their need-based financial aid award. So we do ask that they let us know about that. And then secondly, I do want to mention that the funds usually are sent directly to the university. So we will not apply those funds to the student's account until we actually receive the funds via check, or maybe sometimes it's electronic transfer, that sort of thing.
Okay, so some additional options for covering that amount now due. So thank you, Katherine, for going through some of the loan options or outside scholarship options. And then we also know that some families are going to be making just direct payments to the institution in some form or fashion. So if you did have the means to make a direct payment for whatever amount is directly owed to the institution in July, there are a couple of different ways that you can do that, all of them really through the Student Self-Service Center. So one is through an ACH payment or like an electronic check that you would set up directly to your bank account. There's no service charge for doing this, and you can just have the payment sent directly over from the bank. If you did want to use a debit or a credit card to make the payment, we do accept MasterCard, Visa, Discover, and American Express, but there is a service charge that's assessed by CashNet. That's 2.85% for using a debit or credit card. So if you are able to do that ACH or electronic check option where the funds are moved directly from a checking account, that is a cheaper option because it doesn't incur that fee. You're also able to mail a check in if you didn't want to use the electronic version. You can mail a check or bring a check to the Center for Student Success. Bring a cash payment to the Center for Student Success is also fine. We're not able to accept credit card payments at the Center for Student Success. That only can be done online. For those who need to make international payments or wire payments, please contact the Center for Student Success at 860-768-4999 so that we can provide you with instructions for how to do that. Also, we know a lot of families, have been saving here and there throughout the years in a 529 plan or one of those state-sponsored plans. For Connecticut, the CHET plan, but a lot of states have similar plans. If that is something that you have been doing, some states have now set it up directly through the Transact portal, where you're able to actually kind of log into your 529 plan from within the regular portal, from within the payment portal, and you're able to link that up and then make a payment directly online. Not all states have bought into that just yet. So if yours isn't one of those states, don't worry. There are definitely still easy ways to handle 529 funds. All you would then do in the case where you're not able to link it directly is you would contact your plan administrator and tell them how much money you want to be sent. You can have that check sent to you to sort of reimburse yourself if you've already made a payment to the university, or you can have them send the check directly to the institution with just the student's name and ID number as associated with that check, and we'll post those payments to the student's account. Lastly, and I'll talk more about this on the next slide, is that full service payment plan through CashNet. So back when you were looking at the screenshot from CashNet, you saw that there is an option to set up a payment plan. So what it means to do that is that you're essentially taking the amount now due, or perhaps some other smaller amount of that, and saying, I can't pay this all at once, but I can break it up into several payments over a couple of months, and then that's more of a manageable cost. So in the example where that's, the entire amount now due, say it's $10,000, and you want to break that into 5 payments, you make payments in July, August, September, October, November, and then you've paid the entire balance. So that is an option that you have as long as you're setting up that payment plan by the correct date. There's a small fee of $40 to enroll in the payment plan, and you set up a payment plan separately for fall and then again for spring. So you don't have to use this method every semester, but it is an option for setting up for the fall right now, and then setting up for the spring semester at a later time. So when I say deadlines, what I mean is that if you would like to break that up into 5 payments, then you would have to set it up by July 10th so that all of the 5 payments can actually be made by November. So all these plans are going to end at the same time, but they can start at different times. So the 5 payment plan begins by July 10th and then ends on November 10th. So if you are interested in doing that, we know that the time frame between when you're going to receive the bill that first week in July and then July 10th is very small. So what we recommend doing is actually estimating what that amount now due is going to be for you, seeing if how breaking that up into 5 payments might be a good option. And if it is, you can actually use your own estimate to go in and set up that payment plan right now. And then if it turns out you receive the bill, oh, hey, I forgot to account for that tuition deposit that I already paid, or, oh, hey, they actually had a course fee that's associated and things shift a little bit up or down, we can go and make a change. You can actually go directly into the portal and update your payment plan in the future. So if you do want to take advantage of 5 payments, I highly recommend just going in with estimated figures and taking care of that right away. You are going to make your first payment at the time that you set up the plan. So that's something to just be aware of and prepared for when you do go and log in. If you've missed July 10th, but you still want to use a payment plan option, you can still do a 4 payment plan up until August 10th and a 3 payment plan up until September 10th. That still makes those payments a little bit more manageable. So an authorized payer can actually log into CashNet directly and create that payment plan each semester that you did want to take advantage of that. But again, remember that this isn't something that you have to say, I'm going to pay off the entire rest of the balance in this payment plan, right? If the entire rest of the balance is still too large, even when it's broken into 5 payments, then this is where you want to be making use of a combination of payment options. So maybe you say, okay, $20,000 in our Howie Hawk example isn't realistic to break into 5 payments. But if I can pay $1,000 a month in 5 payments, okay, well, that takes $20,000 down to $15,000. Maybe I'm going to borrow the $15,000 and do $5,000 in a payment plan. So do you see where just, by pulling in some different options, you're able to reduce the amount that you're borrowing and still make all of those on-time payments to the institution? So I'm going to switch gears a little bit and just talk briefly about refunds. So when Katherine was talking about the Parent Plus loan, this is kind of the most common time where we will see refunds hit a student account. So a Parent Plus loan will allow you to borrow up to the full cost of attendance, meaning that it's going to factor in things like books and travel and other supplies that aren't directly billed by the university. So the university is only billing for the direct costs of tuition, fees, room, and board. So, but if a Parent Plus loan comes in and it's supposed to cover all these other things beyond what the university is charging for, then what's going to happen is there's going to be a credit on the student's account. That means you've overpaid, essentially. You've brought in more in the loan than we need. So what happens then is a couple of things. One is if you did not want to have extra money on the account and you were planning to pay for book supplies, travel, and other ways, then you're actually able to return those funds to the lender by working directly with financial aid, because obviously we don't want you to overborrow. However, if you did want to use those funds provided from the Plus loan and a credit on the account to give to the student to pay for books, supplies, travel, incidentals, then the student can request a refund directly through the Center for Student Success. They'll have to use a third-party bank mobile to actually set up their refund preference, which basically means they link it to their checking account so that the money can go directly, through direct deposit, and they're able to then collect that credit so that they can then go to the bookstore, or go on Amazon, or to buy the supplies and the books that they need. And then the last sort of more kind of random thing that I wanted to draw your attention to is this tuition protection plan. So, today we've been talking about some really big numbers. This is obviously a huge investment that you're making in your students' education. And a tuition protection plan is really tuition insurance that would allow you to protect that investment. So this is something that everyone's going to need to kind of research for themselves. But essentially what it does is it can reimburse some up to 100%, again, depending on the plan that you choose, of tuition payments if the student has to withdraw for a covered reason beyond the point when the university would be issuing any tuition credits. So again, if that sounds like something that feels really important to your family, I highly recommend checking out the GradGuard website or giving us a call or them a call to be able to talk more about what different plan options might be available.
Okay, so that will wrap up our presentation at this point. We would like to encourage you all to certainly contact our offices. You will see our email addresses listed on the screen, but certainly our offices are open Monday through Friday from 8:30 to 4:30. And so we would encourage you to contact us via phone, via email, and we can certainly schedule virtual appointments with you. So thank you for joining us this afternoon. Thank you.
Thank you so much.